Global equities mixed to higher amid vaccine hopes. U.S. stocks were mixed on Tuesday, with most sectors in the S&P 500 index being higher while technology stocks bucked the trend. The JOLTS report showed that the number of new openings remained the same in September compared to the previous month, so the release failed to affect the market. On the positive side, investors continued to cheer the announcement from Pfizer on the potential COVID-19 vaccine. As a result, the S&P 500 dipped 0.14%, the Dow Jones Industrial Average gained 0.9%, and the Nasdaq Composite dropped 1.36%. Asian equities finished on a mixed note on Wednesday, with internet platforms falling after new Chinese regulations focused on technology companies, wiping out more than $200 billion of value in the sector. The Communist Party unveiled new regulations to root out monopolistic practices in the internet industry. As such, the Shanghai Composite Index in China shed 0.53%, while in Hong Kong the Hang Seng lost 0.3%. During the latest meeting, the Reserve Bank of New Zealand held interest rates steady at 0.25%, while the policy statement wasn't as dovish as the previous language from the central bank, pushing the New Zealand dollar USD dollar higher. The New Zealand dollar extended the rally to March 2019 highs at around 0.69 and was challenging this barrier early on Thursday. European stocks markets closed higher for the third day as optimism about Pfizer and BioNTech's COVID-19 vaccine continues to dominate the markets, overshadowing concerns over rising cases. Of note, France and Italy both recorded the highest daily coronavirus death toll since April, while in Germany the number of COVID-19 patients in intensive care has reached a new record. Meanwhile, U.S. top infectious disease expert Anthony Fauci said that a Pfizer coronavirus vaccine could be distributed as early as December, while low-risk people in the country should get access to a vaccine by April. The Pan-European Stock 600 closed up 1.1%, jumping to its highest level since February, with utilities adding 2.6% to lead gains, while banking and construction stocks lagged. The major index also rose after European Central Bank President Christine Lagarde said that policymakers will focus on emergency bond purchases and long-term loans for the next wave of stimulus. The report that the UK and European Union were likely to miss their third mid-November deadline for a post-Brexit deal sent the pound lower, while the FTSE 100 advanced 1.35%. Corporate earnings remained an important driver of regional markets as well. The Dutch bank ABN AMRO beat profit expectations but missed net income projections and delivered a cautious forward guidance. As a result, the bank stocks fell over 5%. Meanwhile, the German IT house Bechtle jumped 12.6% on the back of strong third-quarter results. In the U.S., stocks continued their post-election rally on Wednesday despite daily coronavirus cases continuing to surge to record highs as hospitalizations and deaths also ticked higher, as investors have been riding a wave of relief over hopes for a potential vaccine to beat back the pandemic. As such, the S&P 500 rose 0.8% and was just 8 points below the record high it set in September. The technology-heavy Nasdaq Composite rose 2%. Meanwhile, the Dow Jones Industrial Average edged 0.1% after the news that New York would put restrictions on bars, restaurants, and gyms as COVID-19 infections rose in the state. Also, the index bucked the trend amid lower American Express and Walt Disney stocks, which fell 4.16% and 3.01% respectively. As for currencies, the dollar rose against major counterparts on Wednesday, but gains were limited due to mainly positive risk sentiment in the global financial markets. The euro and the USD slipped to 1.1750, extending its bearish correction from early September highs registered above 1.19 at the start of the week. Dovish comments from Lagarde added to the downbeat tone surrounding the common currency. Earlier on Thursday, the pair was still flirting with the 20 DMA and still struggling to regain the 1.18 local barrier. Elsewhere, Brent crude briefly jumped to $45.30 on Wednesday, but failed to preserve the upside momentum and retreated below $44 by the end of the day. On the positive side, the rally was fueled by vaccine hopes and U.S. inventory draw that pointed to a relatively healthy demand. However, persisting concerns over the ongoing pandemic and more lockdowns are threatening to tamp down oil demand yet again, capping the upside potential in the market. Early on Thursday, the futures were trading with a mild bullish bias targeting the $44 figure. Asian stock markets fell back nearly across Asia on Thursday as the leading governments continued to reinstate restrictions on business and other activities to battle the pandemic. Despite machinery orders in Japan falling in September, the Nikkei 225 managed to add nearly 0.40%. Meanwhile, other indexes were lower. Hong Kong's Hang Seng Index fell 0.4%, Shanghai Composite Index declined 0.3%, and in Seoul, the Kospi gave up 0.3%. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.